The last two times we saw this happen, it marked the start of the bull run. In today's video, we're going to be discussing not only the macro charts, but also the short-term price action, going over the current horizontal consolidation range and why the majority are incorrect in regards to what to expect next. Okay, MegaWhale team, welcome back to the channel, guys. Thank you so much for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be doing a complete short-term and macro analysis, going over the most important levels you need to be watching to plan and prepare for the next move. We'll be discussing again why the majority are incorrect about what is happening on the price action and how to correctly interpret the last 10 days of consolidation. We'll also be going over a particular indicator on the monthly chart which has indicated the start of the prior two bull runs, and it is potentially going to happen again. So we have a whole range of information we're going to be going over today. You probably have noticed by now there is no webcam. Again, I am actually away from home for the next 2 days, so there won't be a webcam today and there won't be a webcam tomorrow. Now, before we do get into it, guys, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. We post daily updates, charts, analysis, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, you can join our VIP group. You can see we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Here is a trading example. You can see just in the last couple of days how much profit we are truly printing in this channel. It is absolutely insane. Not only will you get access to this VIP group, you'll get access to our group chats, our general chat, our trading chart and education, our help, our daily video, and our news chat. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment of the free channel for more information. With that being said, let's dive into the video. So starting on that market data, how are we currently looking? 24-hour volume is down 36%, sitting at a total of 78 billion. Now, obviously, as we enter the weekend, volume reductions are expected, so this isn't an abnormal thing to see. 78 billion is relatively normal to see over the weekend period. 24-hour liquidations are, of course, down as well, 37% in the red on the last 24 hours, sitting at a total of 93 million, with 54 million coming from shorts, the majority of that happening within the last 12 hours, and 38 million coming from long positions. So we do take a very brief look at Bitcoin's price action. We can see we tapped that range low for the third time, resulting in a short-term bounce of around 1% up to that 51,500 to 51,700 midline level of resistance, which we are currently retesting. So we'll be discussing in today's video why we believe this will continue upwards and potentially through, and we'll give you the key levels to watch for both the upside targets and for the downside targets, and how to plan and prepare for each of those moves. Moving over to the DXY, we can see the DXY is still looking relatively bearish. Of course, we are now in an overall downtrend, with the RSI breaking toward the downside, suggestive of negative momentum, and the price action breaking down from the overall uptrend, which we can see reflected by the diagonal trend line on the chart. We are very much in a short-term downtrend for the DXY. We didn't drop quite as low as we were expecting. We were expecting a correction down into this range. However, this is still very much a target and could happen over the coming days, 2 weeks. We are watching out for a correction to that local low of around 102 to 103. If we do lose that local low range, expect a larger correction back down to that yearly level, or that yearly low sitting at 100. Moving over to the S&P 500 and Dow Jones, the S&P 500 is looking fantastic over here. Again, breaking and closing this weekly candle, nearly closing that weekly candle above that $5,000 level. Again, provided we do hold that level, we are looking for 5,100, which we did retest, and 5,200. Only a breakdown on the weekly chart below this red line at 5,000 would result in a short-term correction towards our higher time frame area of support. Until then, looking very strong and primed for a continuation upwards on the macro chart. Moving over to the Dow Jones, we have now seen that breakout on the weekly above that $39,000 resistance, an area which was acting as a resistance for around 2.5 to 3 weeks. Of course, a weekly close above this level will propel the Dow Jones up to that 4,000 psychological level, 4,000 being a major area of resistance on the macro chart. Again, going with the S&P 500, a weekly close below that local low, that prior low point, will result in a correction to the all-time high, the retest of the prior high in 2021. Overall, looking fantastic for a continuation upwards. So a real quick overview of what we're going to be discussing. We are going to be discussing the short-term price action, what you need to be watching out for, what is happening with the momentum, what the structure is suggesting, and bullish and bearish targets. We'll then be going over a particular indicator, which is going to be the RSI, which has shown the start of the last 2 bull runs and why it is potentially happening again. And we'll also be talking about a particular structural trend that we've mentioned on this channel many times, months and months ago, and why that is valid and something we should be watching out for that could potentially be hinting a correction is coming. So before we do get into all of that, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, so let's go ahead and jump over to Bitcoin, starting on the short-term charts. What we currently are seeing is a nice, strong sideways consolidation. This sideways consolidation is reflective of, again, the last 10 to 11 days of price action, and is a horizontal channel formation. A horizontal channel formation is simply a sideways range, okay, with equal highs and equal lows, meaning we see the highs and lows reject from the same horizontal level as we do the supports and resistances. So we have this sideways consolidation with equal highs and lows. It is representative of 2 things. Number 1, it is representative of consolidation, and number 2, it is representative of indecision. Indecision meaning there is equal amount of selling pressure at our level of resistance as there is buying pressure at our level of support. So we have this situation where the price action is kind of ping-ponging between this area of resistance and support. At some point, the buyers down over here at support, or these sellers up over here at resistance, will exhaust and the price action will continue in the direction of which it breaks. So these horizontal ranges are generally neutral patterns, meaning they have about a 50-50 chance in the directional break. However, there are particular indicators we can look out for to suggest there's a greater probability for a specific directional move. First and foremost, from a structural perspective, the directional entry into the channel is generally the directional continuation that the channel undergoes, meaning if the price action enters the channel from the bottom side in, we do generally see a continuation through. Now, by generally, I mean there is a small percentage probability that that does actually continue upwards in relation to a correction downwards. So there's a slight favorability for a move upwards than there is downwards from a structural perspective. But most importantly, we look at the overall strength or shifting strength of buyers and sellers, or should I say of the price action within the consolidation range. And overall strength is a reflection of the actions or the decisions by buyers and sellers at any particular time, in this instance within the range that we are viewing the price action developing within. So looking at momentum, we can not only see, number 1, the overall relative strength of the price action, but we can get an indication of how that strength is developing and where it is developing to, which could kind of build to our hypothesis of a potential break toward the upside or the downside. So in this instance, we have two trend lines we are watching on the RSI. We've got our faint trend line, which is we're going to call that trend line number 2, and we've got our main trend line, which is trend line number 1. Our faint trend line number 2, encompasses the range of price action we have been developing within the last 10 days or 12 days, this horizontal range. And trend line number 1 encompasses the range of price action we have been within since creating this initial low and breakout of that horizontal range at 44,000, which has been basically the entirety of February 2024. So looking at this first trend line, this trend line over here is a trend line that has developed within this range, and thus it is a range RSI trend line that we are watching for a continuation to our range high. We have now seen a break of that trend line upwards, which is suggestive of short-term strength. If we look at where that RSI trend line broke, we saw a breakout right over here. Look at the price action since the breakout, we have seen a small move to the midline. While the momentum remains positive, it is suggestive that we are going to see a swing back to that range high. So we are expecting a swing to the range high. For a breakout of this current range, however, we do need to see that higher time frame RSI break upwards, and a break of this higher time frame RSI trend line would suggest not only are we likely to break through this upper level of resistance, that would facilitate a breakout on the weekly of the high time frame resistance over here, which could send Bitcoin potentially into the 56 to the 60k zone. Now, there are definitely reasons to believe Bitcoin will correct, and we'll be going over those in just a moment. However, it is very important to understand that the short-term price action, what develops on the short term, what happens on the short term, eventually translates to the higher time frame and then becomes present on the high time frame charts. So as we saw a 26% rally toward the upside over here, okay? And now we have seen sideways consolidation. This sideways consolidation here, in comparison to this upward move, is suggestive of strong exhaustion or weakness. That weakness now is reflective of a potential bearish divergence developing on the weekly chart. So it is not that we actually have true weakness that is causing a bearish divergence. It is because in respect, or should I say in relation to the strong volatility we had over here, we have now seen a drastic reduction in volatility. So the comparison between these two areas suggests this area is showing weakness in comparison to this area, which was showing strength, and that translates to the RSI, which is a derivative of the price action, as falling momentum, which could be translated on the higher time frame as exhaustion. So you have to understand how these indicators kind of translate across time frames, so you're not, I guess, creating the wrong narrative, or you have the incorrect context of what is actually developing. Overall, right now, taking a look at this structure, this would be considered a neutral structure with a slight bullish advantage. While our support remains as support, there is zero reason to expect a continuation below this level, and while our resistance remains as resistance, and while the momentum remains underneath our downtrending levels of resistance on the RSI, there is no reason to expect a massively higher, greater probability that price action will continue upwards. It is very much a game of consolidation and a game of reacting to when the price action makes that definitive decision in regards to the direction it wants to continue. If I were to give my personal thoughts, I would be looking to take longs at the lows like I had. I took a long over here, we took a profit at the top, we took a long over here, we're still currently in that long. We are looking for a range high retest. While the momentum remains positive, there is a slight probability, or should I say a slight favor, in a continuation towards that range high. However, again, until that range high does break, it is impossible to say for sure that we are going to break upwards. So let's go ahead now and talk about the bearish and bullish case scenario from this range. A breakdown from this range would likely result in a retest of this higher time frame uptrend for Bitcoin. If we see a breakdown, it is very likely we'll come back down to retest, likely this range high retest right over here at around 48,900, 49,000, to our low at around 48,000. This is going to be kind of our golden pocket range. It's 49 to 48k level. Even if we come down to retest this level, that would still be considered very healthy for Bitcoin. Not only would the monthly trend be still intact, but if we zoom out to the macro trend, we will be retesting our high time frame area of support between 45.5 to 48k, which would be very, very healthy. So even if we do see a correction over here, that is a massive tick for the bulls and would be considered very, very healthy. So I'm not too concerned about what happens in the next few weeks. I'm not too concerned about what happens from this range, because I do know no matter what actually happens, the overall trend, the overall structure is very much still strong and very much still healthy. So let's move over to that macro chart now, taking a look at this indicator. If we look at the monthly chart, we are seeing right now, with 5 days remaining on the monthly chart, we have got two very important things about to occur. Number one is going to be a potential monthly candle close above the dotted trend line. Now, if we look back at prior structures, we can see the dotted trend line being the dead cat bounce high of the prior bull market. Now, I'm seeing a lot of people talk about this now on Twitter, on YouTube, which is good to see. But again, we've been discussing this, guys, ever since all the way back down over here. We told you 32k was a key level of resistance. We told you a monthly close of 32k will result in a retest of 48. Now we're telling you 48k is that key level of resistance. If we look at prior data, we can see again, the dead cat bounce high acts as a horizontal level of the yearly resistance. The dead cat bounce high acts as a horizontal level of yearly resistance. The dead cat bounce high acts as a horizontal area of yearly resistance. What we generally do see is a rejection from that level initially, and then we eventually see a breakout of that level after the halving event. In 5 days' time, we have got the monthly candle close, and if we are able to close a monthly candle above 48,000 in the next 5 days, that would mark the first time Bitcoin has closed this high prior to a halving event. If we do take a look at the prior monthly candle breakouts, in instance, if we bring up our trend angle, we have got our low to that breakout, and then we have got that breakout to the high. What we notice is the trend angle, okay? The angle of the trend significantly steepens the moment we have that monthly candle close. We can see a 40-degree angle to a 68-degree angle. We can see a 39-degree angle to a 55-degree angle. What does this suggest? It suggests that the strength and steepness of the curve has significantly increased the moment we get that monthly candle close above that yearly level of resistance. That steepness remains intact for many, many months, sometimes even a full year. This is indicative of a macro, high time frame, yearly long bull run. That is what we would call a bull run, guys. So what we can say is a monthly close above this level will spark the initiation of the next bull run for Bitcoin, which is fantastic. Now, if we zoom out a little bit to our RSI, what else we can see is on this monthly candle close, we generally see a break of that RSI trend line. So I'll go ahead and actually delete everything really quickly and then zoom out a little bit. Again, I'm not really used to doing videos on my laptop. I usually have a whole bunch of screen space, so it's a little bit clustered for me right now. What we can see is we have that retest of RSI, a rejection, but then what we have is we have the breakout of the RSI, and that breakout lines up with the monthly candle close. We have the rejection of the RSI, which is the rejection of the trend line. We have the breakout of the RSI, that translates with the monthly candle close. What are we seeing right now? We are seeing that RSI retest the level of 68, the upper level of that RSI resistance. At the moment, the Bitcoin price action is breaking 48,000. So if we are able to push up just a little bit more, okay, just a little bit more, and we are able to close this candle over this 48k level, and by just a little bit more, I mean we need to break out of this range in the next 5 days, we will have the RSI breakout confirmed on the monthly chart, and we will have the breakout of the dotted trend line confirmed, and that would initiate the next bull run. So those are the two things I'm watching, guys. On the macro chart, I am watching the indicators, which is the RSI and that 5-day close. Very, very important stuff for a macro continuation upwards. On the short term, I am watching the current consolidation range, particularly that level 1, the RSI trigger point level 1, which is that black solid trend line for a continuation upwards. If we do get the continuation upwards, we are very likely breaking through that resistance. If we break through that resistance, it's very likely we close a 5-day candle above the trend line. It is very likely we then continue upwards on the macro scale, starting a early bull run. If we fail to break out of this range and we break downwards, it is very likely the RSI will fail to close above the trend line, and thus we are going to see a possible rejection like we saw in the past, moving into the halving event, and the price action could correct to 48k. So we are very much on the edge of a cliff here. We are kind of on the brink or the verge of a continuation. We are not quite there yet. We've hit a major area of resistance after what has been a phenomenal rally toward the upside. It's been fantastic to trade this upwards. Again, we have spot bags since 16.8k. We've got altcoin accumulation since October. We've had a fantastic rally, but we are now approaching resistance, which is going to be one of the most important resistances for a continuation. Thank you for tuning in, guys. I hope you have a fantastic day. Again, sorry about the webcam. I am away right now, but I'll be back on Thursday or maybe Wednesday, we'll see, for our daily videos with our webcam. So thanks, and I'll catch you guys in the next one tomorrow. Cheers.